Index. Bruno Del Ama is CEO of Global X Management. He runs 30 ETF funds, and they have $1.8 billion of assets under management. And the commodity story, Bruno, is something we've been talking about for months now, of course. Why start the ETF or launch the ETF now?
Well, essentially what happens with the big food producers around the world is that they are really growing. When you look at the population in emerging markets, that's really driving the growth. 8 out of 10 people in the world live in emerging markets, and obviously as their discretionary incomes expand, they're obviously going to drive the growth from a lot of these food manufacturers.
Now, I guess what's the correlation between commodities prices, things like wheat, soybean prices, and the actual impact on the bottom line for food companies? Because a lot of people are also perhaps using this as a play, as a sort of commodities play.
It is to some extent a commodity play. You obviously need to think about it two ways. As an input to a lot of these companies, so obviously to some extent it's a cost and an input to producing the various food products. But also to some extent a lot of these companies are vertically integrated, so they themselves manufacture a lot of the agribusinesses.
Let's talk about the top 5 holdings that you have right now. Are you making these decisions? We mentioned a moment ago that you are benchmarking yourself against a particular index. Do you just try to weight yourself against the index, or making a conscious decision? These, by the way, are the top 5 holdings in the fund at the moment.
This is a passive index, so it's essentially going to track the 50 largest food manufacturing companies around the world. And we think that's a very good way to play what's happening in the food industry, because essentially what's happening is the largest global manufacturers are the ones that have access to the growth opportunities across the emerging markets, China, Brazil, etc. They're also the ones that are in the best position to anticipate and hedge what's happening with the input prices and be able to diversify where they're sourcing the food inputs from.
You talk about the growth areas in emerging markets, but really when you look at the top 5 countries that you have exposure to, you really don't have, other than China, there's no emerging markets really on this list. Do you expect that to change over time?
It will get more exposure from emerging markets, but you have to think about it and look at it with a grain of salt. You have slightly less than 50% of the index in U.S. companies, but a lot of those companies obviously have significant sales in emerging markets. Kraft, for example, has about 50-60% of their sales from international markets, and you still have significant exposure to companies like Brazil Foods and other manufacturers in places like China, South Africa, etc.
All right, Bruno, unfortunately we have to leave it there. There's been quite a bit, I know, that's impacting the fund already in a short period of time on the M&A front. We'll have to have you back to talk to us more a little bit about that. Thank you very much. Bruno Del Ama, CEO of Global X Management.